Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Mr. Felix.
Mr. Marco, how are you, man?
Good. We're back at it again.
How was the weekend? All right?
Good. Yep.
All right, good. Yeah, the weekend was pretty good.
Nice.
I actually there's this water park in New Jersey, in about half hour outside the city. So I went. I haven't been to a water park in forever. I wound up going down this slide that was like 15 stories up, straight down off the thing. They put you. It's pretty cool. They put you in this new capsule, and they close the door, and the bottom just drops out, and you just fall straight down.
Wow.
I think the hardest part was walking up. It was 15 flights of stairs going up. I'm going. So when I get up, I was with my wife, and we're looking. I said, there's only one way down for me. I'm not walking down those stairs. So get me on the thing. But it's funny to see there was a whole bunch of people having a conversation up there. Should I not? I mean, you go up there so far, you wait online, and then you get there and you say, nah, I'm not going to do it. I just went in there, kind of closed my eyes just to get me to the bottom. I want to get out of here. But so that was was the highlight of my weekend.
Nice.
What do we got today? We have some interesting news. You know, we constantly talk about the end game, right? Like, what is the end game? Does the market just go up forever? Like, what's the end game? And for me, the end game is that the U.S. dollar causes the next crash, right? The U.S. dollar is what will cause the next crash. The U.S. dollar crashes, it's game over, right? That we lose the world currency. And, we've been talking about this 3D, 5D chess that the Chinese are playing against the United States and who's going to win that battle. But, they just made another move over the weekend, right? They've issued this, or at least they're about to issue it. I think the digital yuan, right? The digital currency, Chinese digital currency. And they've put some rules around it and how they're going to control it and whatnot. And, I'm not sure I know exactly what that means and what's going on. But I just think 25 years down the road, they're one of the first to do this digital currency as a country. They want to be a leader. Xi Jinping says, Xi Jinping, whoever says he wants he wants to be the leader in this particular type of currency. There you go. First move. Now what? Like, what does the U.S. do? How does the U.S. Make its move next? And what is that move? What do we think about that? It's something to think about. It's something, that there's clearly this battle. Nobody knows when it's going to end, but there's clearly a battle. Powell's on 60 Minutes saying has no chance of raising interest rates this year, just zero chance. They're still struggling to try to make sure that people are staying in their homes and they have food on the table. So, he's telling you there's really no chance there. And then you got the market just making a new highs, bounces. It's gone straight up. So there's a lot going on behind the scenes. Peter Thiel said, he had a great comment talking about digital currencies. He says there's a chance that the Chinese invented Bitcoin as a financial attack against the United States, right? This is like 3D, 5D thinking, like this. Peter Thiel, one of the smartest guys, 3D, 5D thinking, where he's saying they invented Bitcoin to drain the U.S. dollars, to get everybody to drain the U.S. dollars, to buy something different so that they control even the U.S. dollars. Now, Bitcoin and cryptocurrencies are $2 trillion. And, where do we go from here? So maybe that was another move, right? There's all these chess pieces, coming from Peter Thiel. It's interesting. Then the flip side is that, someone says, no, it's actually, I read this week and I thought that's pretty cool thinking too. It was the U.S. who invented Bitcoin. The U.S. invented Bitcoin because they understood what was happening and they needed some place where everybody would put their money in to protect against inflation and against the dollar dropping. And instead of having hyperinflation in the United States, because $2 trillion would have had to go somewhere, what happens is $2 trillion is starting to find itself into the cryptocurrencies, the Bitcoin, and in this realm, which they can control, at least if the money's coming out, they control. I thought that was a pretty cool thought too. I mean, so these are high level thinking and chess. It's a big chess board. It's a big chess game, and each person's trying to make their move. So you would think, you hope that Biden's playing the chess game, and he's not like asking, how do you move the checker, from here to here? Can I jump you? Meanwhile, everybody's playing 5D chess. We hope that this is what's going on. I would believe that the powers that be are well aware of the risk and what they want to do and what they want to happen. Doesn't mean that they can be cornered or not, but I think they're well aware with sort of what's happening, and China's aware as well. You got Russia, and these are the big boys, and they're moving the pieces around. So that's what I would say. I think it's an interesting read on the Bitcoin, on the yuan digital currency. I think you should be aware of that. The implications of Bitcoin, I have no idea. Is it confirming that they're here to stay, and this is what it's going to be, or is it saying, what, the governments are going to have their own digital currency, and if you have Bitcoin, you're on your own in 10 years, So right. I don't know how to read it, to be honest. I'm still trying to. I'm anybody who has a guess or has thoughts. I'm all for it. I'd love to hear everything. So that's what I see there. Today, what are we seeing? We saw Microsoft make a big. They're on the move, right? We always said it by the end of this, call it bull market, before it's over. If it's not crazy yet and it gets crazier, there will be a lot of these transformational buyouts. This is not considered. Nobody really knew who NUAN was. I mean, small percentage knew, right? So they buy NUAN. Discord, people know because people are on it, but they're talking about Discord. They wanted to buy TikTok. They're in the market. They get it. Their currency is their stock. They could just buy whatever they want. So they get it. They're going after NUAN, speech recognition in the healthcare division. I'm sure Apple was looking at them as well. Apple's in that space and thinking about space. But I think it's an interesting buy by Microsoft, and it's sort of out of the, everybody thought something much grander and bigger is coming from them. Maybe it still is. I still believe they have that one big deal that they're going to take somebody out, and it's going to be always at the end of it's going to be something big. One big company taking out another big company. It's going to be $1 trillion, maybe the first $1 trillion deal merger. That would be interesting. Interesting. So, definitely. So that's what I see there. And let's just jump into some of the UOA. I guess maybe we should start with, there was a big one here that I wanted to show people simply because a lot of people ask me about what we're going to see here. But Stone Co, STNE, Stone Company. Big options trading today. Big options. Yep. So let's take a look at.
Yeah. Before we jump into it, guys, please make sure you like the video for the YouTube algorithm. It really helps us out. And subscribe if you haven't. All right, let's get to it.
Stone Co Limited here. May earnings, okay, supposedly, maybe. Last year, this is important. Last year, earnings were on May 26th. So we have earnings here. Estimated the expiration is the 21st. Someone comes in and sells 35,000 of these 55 puts or buys them. Sells them or buys them, right? And it's interesting. It's interesting. And here's why. It's interesting because if you looked at, and I don't have it here, but I actually went and checked. If you looked at the bid offer here, okay, on this trade, you would say that this actually, when this traded, 35,650, when that traded, the market was 65 cents bid at 95 cents offered. Okay, 65 cents at 95 cents. Okay, that's important to understand. So if you're just looking at bid and offer, and some people, some of these firms, these other companies they're showing you bid percentage, ask percentage. They're showing you, this is closer to the bid, so it's on the bid, closer to the, offer side or ask side, and they're in that case, 65.95 was the market. It trades at 85 cents, 35,600 times. What's your initial response? What's your initial thought?
I thought it was a buy.
That is a buy, right? Yeah. 65 cent bid, 95 cents. It trades 85 cents, 35. It's a buy. This is why it's important to go look at the data and to try to think a little bit about what we're looking at, and not just take for granted that some machine is going to say it traded on the offer side. Okay, because if it trades on the offer side, the machine tells you, technology says trades near the offer side, it's likely, within 25%, it's likely a buy. And you then make your full decision on that technology, on what the technology spit at you, then and you find out later that it was actual sale, then you're not gonna do well playing the game like that. That's why I always say that it's so important. It's so important that we are finding and really looking to see whether or not it's a buyer or seller, opening buyer seller. That's what we need. If there's any guess, it's got to be minimal in that particular guess. We're making several guesses in that particular guess. We want to be as sure as possible. So people always ask me, well, this, I joined this side, I joined that side, and they're spitting all these things at me, and they're telling me offer side, bid side, and at the end of the day, yeah, it could work, and yeah, it could give you good information at times, but I like to check, because if I'm basing my whole strategy on following people who are buying and I'm not finding the buyer, it's generally not going to work. Right. Okay. It's just the strategy's off. Your process is off. And so here, let's take a look at why this is. First of all, you would think immediately, a dollar option, who's going to sell that, right? So 35,000 trade. If I added this thing though, you could see that it's pretty, it's underneath, it's in the shaded area. It's not in this sort of window of opportunity. Okay, it's not in the window of opportunity, which should give you at least one clue that maybe this isn't a buy. Because if you were really thinking Stone Cold is going to go down almost 20%, it's at 20, let's see, 13. So about 20% over the next 4 weeks, maybe yes, it's earnings. Okay, if you thought that, there's probably better options to trade, like the 62.5s, maybe even any one of these 65, 62, 60s. These are probably more in the range of where people would be buying. So we see 36. So the first clue to me is that it's not in this window. That's the first clue. Okay, so I can get by that. The second clue is that the volatility is down on the day, and I want to make a little bit more sense of why that might be. And remember, volatility down means people hitting the bids, right? Or the mid market is moving lower. And when we look at this over here, we see that this actually traded at a pretty low volatility relative to where it was the day before. So the day before was about 64, 61 plus 3 here is 64. And this traded, we could see, at 54.7. Okay. Now, I actually went and looked at the trade. I went and looked at the data and the details. Okay. And this tells you a little bit of it, but I wanted to even get more specific. And what I found was that 30 seconds before this traded, maybe 15 to 30 seconds before this traded, the market, we said the market was 65 cents at 95. The market was 95 cents at 135. Okay, 95 cents at 125, something like that. 95 cents, 125. That's important, right? So what happened was that whoever came in actually started hitting, and 95 cents started trading, started hitting 95 cents, maybe a couple of hundred. Let's call it 100 to 200 options trade at 95 cents. Then they went offered at 95 cents. And that's why you saw the market at the time of the trade, you saw the market 65, 95, because someone was hitting the 95 cents. Now he's offered at 95 cents. And then 10 seconds later, 35,600 trade at 85 cents. Okay. Wow. So again, if you're just getting things thrown at you and you're taking the data for what it is, just data, without really analyzing it, and it says offer side, and you think Stone Co was a buyer of these puts, well, you're wrong. Right from the get-go, you're wrong. And now you're starting into a trade that's already wrong, that's already has a faulty base. So I'm here to tell you that was actually a sell. Okay. And it was sell because you'd have to look at the data, and you could see it here a little bit, that we try to show it, where it's, the time frame is one, the volatility is going down, so it hits it right around here. And then the minute before, it was 94 cents. It traded $1 at the open, which is too far away. But 951, it trades 251 options at 94 cents, then 85 cents here. And the volatility was much lower than it was the previous day, 9 points lower. So that was someone that looks like they're trying to take a 85 cents coupon dividend from the market, and they're willing, and they're basically saying, I'm willing to buy Stone Co at $55. Give him my 85 cents right now. Okay. Right. That's bullish in a way that's someone saying, I'm willing to I'm willing to buy the stock here as much as you want at 55 cents. But it's still, mind you, it's still 20% down. It's also could be someone that learned that earnings will be on the 26th. Right now, it's estimated to be anywhere between the 18th and in late May. It's called the 20s. And last year it was May 26th. So someone, the way it works is you're calling IR, and you're talking to them, and these hedge funds talk to them all the time, and they're having their weekly call, and it's Monday morning. How are you? And so listen, I was thinking when earnings are coming up, and when do you think we're going to get a date? Is it the 26th again? Right? Maybe you lead them and you say, is it the 26th again? Right? Because they're good at that. They're good at leading and trying to get a reaction. It's like, are you doing it the 26th again? And then they see what they say, and he says, yeah, I think that's the date. Let me see. You know what? We're going to put a press release probably in the next day or two. Bam. They get their answer, right? And that one little thing could have caused them to come in and say, sell the maize, because you're not going to get earnings there and sell 35,000. We'll still buy it anyway, but that's going to be a free coupon, a free 85 cents for us. Nice. You see what's happening there? Okay. So, it's not that it's not like, I'm not saying inside information, but it just the way the person could have responded, could have gave them enough information that would have said, I'll take the chance here. We think it's May 26th and we're going to sell the May 21s because they have those too high for earnings.
Nice.
Fair?
Yeah.
Okay.
Yeah.
So it's important. This was a really good one that I saw today that, it is somewhat bullish for Stone Co. It's basically saying you got a buyer there. Someone saying, I'm willing to buy 3.5 million shares. But if you're looking at UOA and trying to follow that trade, you might be confused and might buy it based on the fact that you thought it was a buyer.
Right.
Can you hear me?
Yeah.
You could. Okay.
Yeah.
Let's see here. I'm just seeing that there might be some connection issues. So if we have anything, let me know. Give me the thumbs up if you don't hear me or something. So that's what I would say about Stone Co. And obviously it's a little bit outside the window. That was the other, there's a lot of clues. It was the date of the expiration that they're choosing, which happens to be nobody knows when earnings is coming up, and outside of the window. And then looking at the data and seeing that the IV was down a lot, and then seeing that after the sell, the stock ripped.
Right.
Okay. So there was a lot of clues there to tell you that it was actually a seller, not a buyer.
Nice.
All right.
Love it.
Good.
I like it. That's a good one.
What else are you seeing?
I'm seeing a lot of stuff in the banks, Bank of America and Citi in particular.
So the banks got earnings this week. Let's take a look. Bank of America.
Yep.
40s. It's hard to tell exactly what they're doing. They got earnings, and obviously the stocks have had huge moves. People are still betting for the upside here, bet on the upside in general. What do you think you're seeing? It's hard to decipher that.
June's. Looks like a call spread there, 42.
Okay. Yeah, the 42, 46. So 14 and 27. It looks like it's probably 12,500 by 25,000. So somebody looks to me like they're doing a 1x2, which is interesting. So we talked about a 1x2 call spread, I think last week or 2 weeks ago, and we started talking about new strategies that the big guys do use from time to time, and they use them really at times like this. We talked about they were doing it in Micron, the 9110 call spread, 1x2 in Micron, and here you see they're doing it in Bank America. So what they're looking at is they're buying one of these and they're selling two of these. So if you buy one at say 110 and sell the other one twice at, let's just call it 30 cents. So 110 and 30 twice. So it's $1.10 and 60 cents. So it's 50 cents. You're paying 50 cents. The most it can be worth if Bank of America lands at 46 on June 18th, the most it could be worth is $4. Now I call these a little bit. It's a pipe dream. It's in order to capture that $4, it's almost impossible, right? Because if you get close to 46, even at expiration on the last day, that call option is still going to be worth 30 cents, and you're short two of them. So 2 times 30 cents is 60 cents. So 60 cents less 4 is 340. So it's likely that you can make, if the stock moves up, that you can make 50 cents could make $1.50. So it's about 3 to 1. Even maybe $2 creeping up if you're getting closer to expiration. But this is a play that people use when, again, we said when the stocks go up. So if we let's look at Bank of America. We saw what happened with Micron. Micron, they were doing the same thing 1 by 2. So here we're looking at stocks have gone. I mean, geez, we got to go back a little bit further to kind of really fill this out. Okay, so we have what we're looking at. You know, that's clearly something, some sort of pivot level. We had this over here as something. It never actually reached all the way down here, and now it traded up. And this was something here, and it looks like it's sort of near the 40 line. So what do we do here? 28, call it 28, 30, 28, 34, 6, 40. So 6, 6. You have here, what is this? This is, I'm going to fit this backwards. So I'm going to go from 40 to 29 and a half. That's 10 and a half. 10 and a half less 34 is about 20, right around here. So 24 and call it right here. So if I'm looking at this and this, and I draw a line here to here. So from the gap, from exactly that gap, right? From exactly that gap, you know, you have the same thing. You have this move down here, which is the same thing I'm always pointing to, this sort of wave theory. Oh, sorry, I think I pressed backwards. Let's see if I can get back in there. Let's do it real quick. But
okay,
basically go from here to here. You go from here to here, and then you go from here back, and you can see that it almost ends up right around here. This is 20, call it from right here, 24 to 34 is about 10 and a half, 39 and a half plus 10 and a half is 40. It gets you right to 40. So A, B, C. Now people have been playing call options, but we've been talking about risk reward and sort of, you know, having people seeing exactly what we're looking at and saying, you know what, this has been a significant move, significant move from all the way up, and maybe we should take a little bit off here and buy some call spreads or buy calls. But the banks are up because of the yield curve. You know, they got to produce, right? There's a lot of built-in expectation for them to produce. You know, how much did some of these banks get affected by, you know, maybe deleveraging the hedge funds and prime brokers? Maybe they'll talk about that. You know, have they? There's an economist who's actually really good. He's former Barclays guy, and his name is Barry Knapp, and he's really good. It's not for the beginner. He's not for the beginner. I have trouble following him. He's a big macro guy, but has some nice calls, and I like listening to him. He's a smart guy. Barry Knapp, KNAPP. You know, maybe support him and you go check him out. But he's if you're into the macro, he's going to talk the macro game, and he's good at it. But it's also high level economics. So you have this here, and we're seeing call buying, but it's got to produce. The thing about the banks is that they're coming out with the buybacks in the next, I think they're getting started in the next couple of months. So on any drop, you probably see, you know, some buyers here. You know, that's what I got on Bank of America. So I would suspect that you're seeing some shift of risk reward in these names as well. What are you seeing there? Let's just go right to the Bank of America. We're seeing this 1 by 2. You're seeing the 42, 46. So with this, you know, move, they're looking at 42, 46, 1 by 2. And remember what that does is gives you, let's recall what the 1 by 2 does. A 1 by 2 call spread, basically, you can divide it up into two pieces. You can divide it up into one call spread, 42, 46 call spread, and then you can just take the other call that you're short to 46, and that's short against, you're probably long some stock. So most of these people who are doing this, they're long stock, and they do this trade on top of their stock. Okay. So now if the stock goes to 46, they make on the call spread completely, and they make on the stock from 40 to 46, and then they give up anything above 46. So that is telling you that this person is comfortable selling his stock at 46. Okay. He's basically said, let me put a trade. The stock has made a big move. I don't think it's coming down a lot, but I also don't think it's going to explode. I actually think it can, you know, come down a little bit and then make another move going into June, into the buyback period, and sort of like be in this area of sort of trending higher. That would work perfectly in that environment. And so that's what they're doing. So it's a trade that's saying to you two things. One, I don't think it's going to crash. I don't think the banks are going to just completely fall out of bed. Okay, that's one. Two, I believe that they'll trade in a range up or down. This whole thing is going to work nicely. That 1x2 will expand. So even if the stock is down $2, $3, you will see that 50 cents not really move in price. It will probably stay around 50 cents. Where that trade loses is if the stock just shoots straight up through 46.50, and now you're basically capped out at 46. You still made good money, and your break evens are going to be closer to 50, $50.50. But at the end of the day, if it starts going through 50, you're out of that position. And that's that people do this when they're pretty comfortable with what they're looking at. Right. Mm-hmm. With the stock around this area, I feel comfortable. I don't think it's going to crack. So, that's bullish for the banks. Okay.
Mm-hmm. Okay.
What are we seeing in the other one? Was
Citi? Yeah.
Citi?
Mm-hmm. Yep.
So it's Bank of America. Probably similar things.
It was kind of shuffling around. Yeah.
Setting up for earnings.
Mm-hmm. Okay. So it looks like they sold the 76s there in April.
So let's see here. 76s. Okay. Mm-hmm. Sell those to buy.
Yeah. To buy the May's, looks like May 77.5 and 80s.
May 77.5, gotcha. Okay, so 10,000 times. Mm-hmm. So basically, they're just moving around. They're saying something similar. We're going to need more time. It's not explosive. I need more time. I need out to May, maybe even to June. You're probably seeing some stuff here. Let's see what's going on in June. 16,000.
Yep.
So again, it's. Maybe it's Powell saying he's not going to raise rates, but 75-85 call spread. This to me smells like either another 1x2,
right?
4,500, 5,000 by 10,000 almost. So another 1x2, which would be about $1.30 for this trade. So $1.05 by, let's call it 2.30 and 50 cents. So that is 2.35 and 50 cents. So that's 50 cents twice. It's $1. 235, so $1.35 for this structure, and the most it can be worth is $10. The most you can probably make without getting out of it is probably $6-7, $7 call it, and especially on a grind, if it does grind up towards the June. So you get bad numbers or numbers that don't exceed expectations because we got some good numbers built in there. Stock drops even just a little bit and then grinds higher. This is going to work out perfectly for them. So you could take out $6. So you pay $1.35, $6 again, 300-400% if that happens. So these trades work really nicely for the big guys. It's one of those trades where you want to be long the stock to do this, and you could sleep like a baby at night. Does that make sense?
Yeah.
Because you basically and remember, how do we actually take advantage of it? Remember what we said they were looking for. They were looking for this blue line usually to be over here, which is telling you what? What is this saying to you, Marco? The bull bear. When the blue line is closer to the
calls
bull,
are bid, right?
The calls are bid. And what are they selling here? They're selling the upside calls to people. People are excited about the banks and they want to buy the calls. They're selling those upside calls. This right here is telling you how the board is set up. The calls are better bid than the puts.
Right.
Okay. If this was lower, then you wouldn't be getting a lot for if this was way down here, these 50-cent calls, they'd probably be 35 or 33 cents. Does that make sense?
Yeah.
It would be different. It'd be a different price if this was way lower. So right now they're trying to take advantage of this right here, this 3-month, it's called skew. So in 3 steps of profit, we go through skew, all the different facets of skew, how to think about it, how to look at it, how it's done, how it's calculated, and what it is. And this is how I basically took one little thing, a sentiment indicator, to say, all right, if I need to look at skew, this is what I'm going to look at. Here, skew is low. That means calls a bid. Here, skew is high. That means puts a bid. Okay.
Yep. Nice. Yep.
All right, good. So that's to me, it's interesting what they're doing in the banks, right? It's the big guys are telling you, things are okay in the banks. They're not going to crash, but they're not going to be explosive just right now, which means that maybe earnings aren't going to be that good. They'll be okay. They're just not going to be explosive this quarter. Okay.
Okay. Yep.
Good, good.
Before we jump into Microsoft, guys, make sure you like the video and subscribe if you haven't. It really helps us out with the YouTube algorithm to reach more people. Now, I've seen a trade in Microsoft, and then you also mentioned some news with NUAN.
So the NUAN, so Microsoft. I mean, I don't think there's any play NUAN. I could tell you that NUAN actually popped up in unusual options activity last week, and it wasn't a lot, but NUAN doesn't trade that much, and it wasn't a lot, but it was enough to pop up on the screen on Wednesday last week where they were buying April calls. They were buying the April 50. Is it 50? Where's NUAN? Where's NUAN right now? NUAN trading at 52.99. They were buying the 50 calls in April for 25 cents, I think, which turned into $3-4 today. So, yeah, I thought that was interesting. So there's always, people say, oh, what's the value in UOA? Well, if you know something, you're running to the options market. It's that simple, right? It's that simple. And so, or if you've got the answer, if you've cornered the fundamentals and you say, this has to be it, or this is what I believe, you're high levered, high confidence bets. The hedge funds are running to the market, to the options market.
Right.
Okay.
Right.
So Microsoft, what do we see here?
So look at April 30th. And it seems like they sold the two
April
50s.
Oh, earnings, potential earnings. Okay.
Right. Looks like they sold the 250s. Are they there? Yep. To get into the June 275s.
Hold on. I just want to check that. 29, 28, 27. Okay, I can kind of go with that. They sold that to get into what?
June 275s.
I can go with it. I'm not 100% sure, but I can go with it. It makes sense. Makes sense that someone made money on the maze and now just throwing a shot out there in the. I mean, it's a big move. See, it's 275s or 270s. What did you write? 275s.
275s, but it looks like those 270s are with the puts as well, so might be a funding.
Let's see. Oh, the 275s. Look at you. I'm gonna start calling you Eagle Eye. You're getting good at that. Okay, very good. Yeah, that would be just looks like a funding trade. It looks like a funding trade. Okay, so the 275. Yeah, it looks to me. You see how this is, again, the first clue. It's out of this realm. Microsoft is probably better. There's probably, for a big guy, there's probably a better trade than buying the 275s. For that of the money, you got a risk reward dollar price at 292. It's a big move, $20 just to get to almost $20, $18 just to get to the strike. Then you got to actually make the money. So $18 is 7.25%. So set a little bit over 7% move, and call it 7.5%, 7.5% move to just to get to the strike. It's a lot. I mean, what's the market cap in Microsoft? You want to take a guess? 2 trillion?
2 trillion, 1.8 or
1.94. Look at you. All right, not 1.94. So let's call it 2 trillion. 7% on 7.5%, 8% on 2 trillion is $160 billion in market cap that it would have to reach over the next, call it few weeks. 4 weeks in June, 6 weeks, 8 weeks, call it 8 weeks. That's a lot. That's a lot in anybody's book. But we've seen crazier things. Let's take a look if that's even possible from the chart. So if we're just looking at Microsoft and we wanted to pick, a level and where we thought it can go. Let's see what this says. Just looking at it here. Strong, like crazy. 215. So let's call it right there. 215 to 245 is how much? 30 down, and then 30 from 225 to 255. So is that right? 215, and we're looking at 210 to 245, 35 to 260. So 260. That's a little bit more like it. Right around 258, 260, somewhere around there. That would be that wave. 245 is the level that it broke through. Volume was pretty good. Volumes were pretty good. So, 275 it's a long way up. To be honest, I don't know what I'm not sure. I'd have to go back and really check. I'm not sure if that was someone who's buying back the Aprils to sell the Junes. You know what I mean? That would to me that makes more sense. You know, they sold the 250s, right? What was it, 250s we were looking at? They sold
250
the
and
April
270,
250s. They took a little bit of loss, but they've made $15 on the stock, and then the 275. So I think I'd be careful there. I'd have to really dig into that. It's again the spreads. When you're looking at spreads, it's difficult. They can trade on the offer and the bid, and you can give you a mixed signal. But I think if you look back historically at the opening trade, and maybe we saw a sell there, it would make sense that somebody was trying to sell those 250 calls with the stock at around 235 in a triangle. You see this triangle here. So there's someone here. We don't know when that was, but if someone was selling something like that on this and this big, let's move this up here. So you got this sort of like flag coming here, breaks out. But if somebody was in the beginning of the year, or even in February, 225, sell 250s, and you get decent money, okay, they lost. Now they're going to sell the 275s, get their money back, and they made $30 on their stock. So to me, it strikes me a little bit more as someone bought the Aprils and sold the Junes. It just makes more sense to me. So I'm going to go with what makes sense if I had to guess.
Okay.
All right, good. What else we got?
We got a few people asking for DraftKings. What's going on today? Hey, why is it dropping so much?
DraftKings. Look, by the way, so we talked about DraftKings last weekend. We spoke about how to think for yourself. I pulled the video because I made a mistake. Lord knows I make lots of mistakes, and I made a mistake in talking about. And someone pointed out. Couldn't pronounce his name here, but he pointed out nice enough to say, hey, you were talking about market cap. You're talking about price as opposed to market cap. And he was totally correct. And so what I did was just to make it easier, let me share my other screen here again. What I did was I tried to label it this time. I did that a minute before the podcast last time. And I want to now actually go back just to at least give people a better sense of what we were talking about. Okay, so I labeled it a little bit better. I added these yellow things to say this is how you can put stuff in here and whatnot. Today's price, let's call it 59, market cap 23.25, handle total bet. So this is where Cathie Wood says in 2025, the total betting amount in the United States will be $180 billion. And, given 7%. Now, historically, remember we said 5.5% is about right for casino sports books. But because the new amount of people is saying they trade more of these parlays that you can increase that, right? You win these 5 and you'll win 10 times your money. Most people are not going to, that's the sucker's bet. So, but the casinos and DraftKings would make more money on those types of trades. And this year is going to be the market percentage that the market percentage that they capture over time, how big they're going to be the number 1, 2, 3, 4 player in every market. They're going to own 25% of the market. Who knows what that number is? That's a number. It's a guess. Net income. How much are they going to make on their bottom line? That's a guess. A good number would be 15 for a company. Let's give them 20 because they're doing something special. Okay. PE at that point in time, let's call it 225, 2025. Whenever we hit this, 2025, maybe some people say 2030. Cathie Wood moved those moved up 5 years. And what's the PE going to be when that happens? It's going to be a mature business, so people are going to be making money. And how much will the PE be? That's a guess. And price to sales. Right now, DraftKings is trading 25 times sales. So, when the industry grows to $180 billion, people betting, you're not going to be at 25 times sales, right? A mature company actually starts going from 25 down to 3, 4. And then PE starts becoming the bigger number in general, unless you're Amazon and you go to infinity forever and nobody cares. But it's a much bigger market. They're talking about trillions of dollars in market, total addressable market. Here you're just talking about the betting, online betting, casino games, and fantasy sports. But if you did this and we were just doing online sports, right? We were just doing it. They also have the fantasy sports, and they also have this iGaming, basically slots and whatnot. So, but the real crux of the story is online sports betting. Okay, so if you stick in this and you stick in these numbers, then you get these, this would be the revenue, 25% of the total revenue, which would be this, 20% of earnings would be this. This is where I was talking incorrectly on last week on Thursday. I was talking about the market cap, and while I was talking about the market cap, I was sort of relating that to price. This would be the market cap of DraftKings given these PE ratios and a price to sales, and that would translate from today's price to about 48 or 80 bucks. Now you can change these numbers however you want. You can make this 30%, make this 30%, and you can see how the numbers change. That changes it dramatically. So netting these percentages do change. Price to earnings could be 50. Depends on how the industry is growing. And you could see the stock price 120. So right now the stock price was 62. My personal opinion, the environment where we're in, okay, and I've been saying this for weeks now. The backdrop of the whole story is what we started seeing UOA doing. What they were buying. It's right here. Let's take a look at it so we can just take a look and see. So that's the Excel spreadsheet. Let me change the stop screening, and then I'm going to change it back to where we were. Okay, so now we're getting to DraftKings, right? And DraftKings, this whole talk about DraftKings started when I hated the stock over here. I was dead wrong. Okay. So I hated the stock over here. Dead wrong. But 40 puts didn't work out. Great. Stock went up. I haven't touched it. Now I'm looking at it here again and saying, it's 20. It was a $28 billion. It was going out. It's come down a little bit here. And the stock has a lot of puts. You'll see. Let's go range of 60, 50 to 70. Let's just throw that out there and put this. Okay. So just to highlight where the big numbers are. Okay. We saw I think it was BlackRock, but we saw someone big come in and start buying these 55 puts. They were buying these 55 puts and they were selling the 65 and the 70 calls. Okay. So that gave us this range. That gave us this whole, that was the first time we started looking at DraftKings and talking about it on the podcast. And, we didn't know that whether or not where the stock is going, but we do know that someone wanted to collar their position and was taking this moment right around here, okay, to start collaring. Was trading somewhere, actually trading, and it started dropping into like somewhere around the 60s, I believe. But we can go back and even look at the dates. But essentially, they were saying 70 bucks and $55 is where I want to make sure I'll play around in this zone, but below that, this thing breaks. I want to be hedged up. And people were buying. Someone was buying puts in big size at 55, and they were buying and they were selling calls. And that's when I started looking at it again, and we started talking about basically that model and talking about sales and how big it can grow. And this whole way up is where Cathie Wood is basically buying the stock. She started buying the stock, and she came out. It's on CNBC. You could see their analysis. They basically said $180 billion for the market, for the total addressable market. And that's a big number. It's a big number to get to. And it was eye-opening. It was for everyone saying, oh my gosh, if that happens, everything's going to explode. But at the end of the day, it's got to happen. And when the big guys, we always say the big guys, they control where the stock is going to go. If they want everybody to believe the story, they're going to be getting in it. They're going to be pushing it, and the stock's going to go up. But if they're trying to get out, and they're trying to get out of millions and millions of shares over the course of, remember, they're long from here. The big guys are long from, some of them are long from here, even from the SPAC, but they're long in this range, right? And now the story is starting to blow up all the way out here, and they want to get out. You got to find the next big buyers to pay this level. Big buyers, okay? So that's where we are. Now you got to assume that the next big buyer who's going to buy this stock at this level has really got to understand what they're doing, and they have to be right on that spreadsheet that I showed you. And not only that, but digging into each component of that and all the other different facets. But that was just a back of the envelope calculation saying, look what the stock look what has to happen if the market ends up to be $180 billion. DraftKings is not going to make $180 billion. They're not even going to make $10 billion. They're not even going to make $1 billion. And it's hard. It's going to be harder and harder for them to compete when there's 17, 20, 30 other players in the game. Not saying that they're not going to make 20, 25% of the be 20% of the market, or even 25% of the market. It's just how much money can you make off a commodity product. And before it's over, there's going to be a million of these sports books and apps, and you could try a million starts eating at five people here, 6 people. So if everybody opens up an app and has 5 people betting on their app, and there's a million of them, that's 5 million people. Not saying that there is going to be, and obviously I'm trying to be extreme, but I'm trying to point out, like, just common sense. Common sense says that's probably a little bit high. Not saying it can't go up. And even if you come up with a situation where DraftKings can go from $70 to $200, you're talking about maybe 8-9 years. That's a long way to go for a lot of risk to the downside of getting cut in half and trying to make that for the long term. So they think there's better opportunity to get long, probably lower. I still believe the stock gets to 40, maybe even the high 30s. Looking at the chart and the graph, we're seeing, let's take a look here. There's too many lines there for my eyes. So let's go a little bit. Let's just go one more time. Again, I said it the last time. The chart still looks okay here, but it's having a lot of problems here. And if you look at 74 to 58, and then it bounced back, that's 16 handles, 16 points. 16 points from 64 gets you the 48. 48 is at that 200-day moving average. I would suspect if it breaks there, then you got 44. I don't expect it to break at one shot, although it can. But if these names are just, I look at ARK. And you know what? Everybody should do this as homework. Go look at ARK's top 10 holders. I did it yesterday. And, I go look at top 10 holders and then look at where their stock is versus their 200-day moving average. I think it's a good exercise to see where things could go. 200-day moving average is a long-term average. It's a name that if we turn over a little bit, things tend to go towards the 200-day moving average. And I think it's a good exercise. Just go look at the top 10 names, which make up almost 50%. They make up almost 50% of ARKK, 10 names, okay? And you got some cool names that everybody loves to love. And, but go look to see where the 200-day moving averages are. I think you'll be surprised how far away we are from the 200-day moving averages. And we're already at all-time highs. So if we pull back a little bit, can we get to the 200-day? It's not unheard of. You have to give it some probability. You can't just say, no, it's just going to keep going up. We're not playing the game of we know exactly where it's going. We're playing a game of probabilities. And I'm telling you that on a move down, 200-day moving average is not far-fetched at all. And so I think that's good homework for people just to see how extended some of these names are. Then, like we looked at ARK, see where all the volume came from, right? We boxed that out last week and we showed you how all the volume is setting up. So it doesn't surprise me that DraftKings is down. That leads me to Fubo too. Fubo is the same thing. These are names that I get it. There's passionate people about it. And I get the story. What you hear, people yelling at me. 500 million people, half of the world watches soccer. It's true. During the World Cup, half of the world watches soccer. During different regional games, half the world might be buying. The problem is half the world doesn't have $60 a month to pay Fubo TV to watch soccer. And in fact, most people, when you're watching, from what I understand, they go to stadiums and watch it on big screens. They go to the bars and watch it with friends. They're not sitting at home all watching it. There are some people that have it full time on when the games are on, and I get that. But many, remember think about this: the UFC, when there's a fight and they're trying to charge $80, $100, you know how many pirated videos there are out there? It's like you can't control it. You can't control it, and so one person buys a $60 subscription and fans it out to 1 million. Right, because the link gets passed around, everybody watches it. When that gets shut down, they drum up another link and then another link. You can't stop it. It's like a weed; it just keeps growing. And so I suspect Fubo's got an interesting business. I love the product. I like sports. I like a place where I could just watch all the sports. The problem is they're playing this game. Okay, it's a game of cost. They have the cost to get the sports on their TV. Right, you're playing this game of subscriptions. So you need the subscriptions to go up. So not only do you get the $60, but then you make on the advertising, okay, which they think they can go from 6 to 20. So you got to get the subscription up to get the advertising dollars and people watching sports. And then then people say that's a home run, because then you're just getting all the advertising dollars. There's like $60 billion that's leaving basically straight TV, and it's got to find a home. Netflix, Disney Plus doesn't offer commercials, so it's got to go somewhere, and Fubo's perfect, sports and whatnot. I get it. I get that. The problem is you actually have to get there before you run out of money. And then adding the sports gambling, some of the people that are long Fubo, they're also long DraftKings. So how many 25% of the market can you have? It's going to be Fubo, FanDuel, and DraftKings. Those three own 25, 25, 25. And what about BetMGM? What about Las Vegas Sands is going to throw a couple of billion when it actually matures and they know what they're doing? And what about the 10,000 other apps? They're going to own maybe 2 to 5%. So, you got to be perfect on your analysis. And Fubo, even if it owns that much, and I don't think it can own that much, but even if it does, it's still not going to make as much money. It's just not going to hit the numbers they need. Is it worth more than $3 billion, what it is today? I don't know. You're at that race. I would say this, it's another business where they're relying on, here's an exercise for you. Okay, here's another exercise for you. Go Google Netflix. Okay, go Google Netflix's original total content in 2010, and then look at Netflix's content in 2020. And you will find that Netflix had like 70,000 movies, no original content. And now they have only about 3,000 movies, and a good percentage of it is original content. And probably the percentage watched on Netflix is original content. Okay, so they had to beat the shorts, and they won. Netflix won that game. Okay, why did they win? Because they had the subscriptions. They took that money, levered it, got in massive debt to build this studio and build all this original content, because it was a race to actually, they had all these licenses from Disney. How many Spider-Mans can you see on Netflix? 0. How many Star Wars films can you see on Netflix? 0. How many anything Marvel can you see on 0? Okay. Netflix sort of knew that, and they were playing this game of, yeah, we're doing well, everything is fine, we have these licenses, but they knew that they were going to lose those licenses, and so that's why they did original content, and they had a race, and it was a race to beat that pull, right? The rug gets pulled under you. How is Fubo TV going to produce original content? How are they going to do that? They can't. They can't. They take. That's how Netflix is now. Fubo can expand out of. This is where they could do something that's awesome. They can create an ESPN, which is just talking about. They can create content around it, and that's what they're doing. So that's the race. I'm not pro Fubo, against Fubo. I'm simply trying to lay it out for you to say, this is how it's all coming together. Fubo has dropped a tremendous amount. Do I think it goes to 0? No, there's some value there, right? They have customers, but they're losing money and at a quick speed, and they have this race to get subscribers at $60 a month, okay, and get those advertising dollars up so that then they can get into longer term deals with license or produce content like an ESPN, which, by the way, is valued at a significant amount. So if they can produce the next ESPN, man, then you got some. So I'd love to see Fubo start looking like doing original content like an ESPN. That would be interesting. That would be somewhat interesting, because ESPN is valued, and they're just, sports promoters and talking through things. So this is the game. That's the Fubo game. DraftKings is just a numbers game on whether or not the fantasy is 200 billion, a trillion in 10 years. Like, what are those numbers? Nobody knows, but that's what makes the market. All I'm saying is pointing out to you, this is what the big guys are doing right here. And if you just think about who controls the market, it's always the big guys, not even the hedge funds. I'm talking about the BlackRocks, the Vanguards, it's those guys. They control the market. The hedge funds are, I don't want to call them bottom feeders, but they're just like, they're just eating what they can along the way, for the most part, trying to take chips here, chips there, chips there, but it's the big guys that are saying, if BlackRock wants EV to go from a stock to go from 10 to 120, they can do it because they're BlackRock. Okay. And just the stock price is going to get people momentum going. And then when they want to get out, though, they got to act quickly, and they start moving things around pretty quickly on the way to at the top. So look, DraftKings, Fubo, online gaming, I think the numbers are too high across the board, and that's why you're probably seeing DraftKings down. Just because there's some big there. Who's the buyer? Show me the big buyer who's standing there paying $70. Cathie Wood. Well, they're going to press her anytime soon, and they're going to have her actually, feel some pain, because if she's forced to sell, forget it. That whole tree, just like it's like timber. You know what I mean? The whole tree is going to Cathie Wood. There was no no pun intended there, but the tree just falls, right? She's got to start selling. Anyway, that's my rant. Fubo, DraftKings. People are going to yell at me again. All I'm trying to say is I don't like the stock at this valuation. I like Fubo TV. I'm considering actually buying the thing, but I don't know how they make money. I don't know how they'll be around in 10 years unless they do this or that, and they're probably going to do it. So maybe that's the positive.
Right.
All right.
Okay.
There we go.
Nice. Go.
What else? That's it. I'm going to lock my windows and my doors and make sure they're bulletproof. Let's start getting bulletproof. It's funny that who comes out of the woodworks when you start talking about this. Yeah. All right. Who else?
What else we're along Uber. You have any thoughts on Uber?
Uber made a statement today that they're getting in the marijuana. They're getting in the delivery of drugs.
Yes.
The minute I thought that, I laughed and I thought, man, how times have changed, right? In New York City in 1990s, 2000s, like the drug dealers were they were like Ubers, right? They were literally lined up all around Manhattan, and they were a call away, and they'd end up, not that I ever called them, not that I've ever done that, but they would go, you call them, they'd be at your door, they'd be at the club, they'd be inside the club. You call them, the guy pops up, you're like, dude, you're here, you following? They're all over the place. So now you got Uber doing it. It's like they're putting those guys out of business. So, I thought it was funny. I thought, all right, Uber's, look, they're delivering everything. I think that the interesting part, we're long Uber calls. Okay. We're long Uber calls. And I think the real interesting part about Uber is the why, right? We're always asking about the why now. Like what, yes, they were, when we bought them, it was the reopening and whatnot. Technically, it was at a decent level. We're seeing some call buying. But I saw an article on Diddy, not P. Diddy, but Diddy, the car company out of China. Okay. Yeah. And the article basically, right, that Reuters was saying that they were going to do an IPO, and they were thinking about the valuation as $100 billion. And in my mind, I thought to myself, I remember Uber, I thought they owned Diddy. I thought they were, and it turns out they're one of the biggest holders of Diddy. It's like 15%, 50%. So simple third grade math that I do, 100 billion times 15% is $15 billion. So then I just look at Uber's valuation. This is pretty substantial. And I look at, it's right there on the earnings. It says Diddy valued at like 6.6 billion, 15 billion, 6.6 billion. It's like $8 billion. That's a lot. That is a lot, and they can make that if they exit there, or maybe they want an exit. I know they had been selling some pieces of it, but that's a lot of money. And what's going to happen? This is how, again, the way we're thinking about things. We're trying to anticipate the story. We're trying to see, is it an easy story? Okay, so in my mind, I read that, I see the news, I see call buy, and I say, okay, what's the story? The story is, hey, Diddy announces $100 billion IPO, like Coinbase, $100 billion, right? And everybody's talking about Diddy, and it's like, well, how do you get into IPO? Well, it's coming through, say, Goldman and Morgan. But are you going to get any shares? Are you going to get any shares? Nobody's getting shares. Just the big guys are getting shares. Okay, so now what? That stinks. We can't invest in Diddy. Somebody's going to say, you could just buy Uber. Uber owns 15% of Diddy, so you can get like 15% of every share. That's it. All of a sudden, the story goes like wildfire and saying, don't buy Diddy. If you're not going to be able to buy Diddy, just go buy Uber before the IPO. I just thought to myself, I think there's something interesting there. So you know what? That could be the spark. Not a lot of people know that Uber, that Diddy, not a lot of people that are in the market trading around and whatnot, that, maybe they didn't even see the Diddy article. That's one. And then two, if you saw the article, you'd have to make the connection that Diddy's owned 15% by Uber. Mm-hmm. And I happened to make that connection. And so that's part of the reason we're long. We're also long because we needed a reopening stock, and it seemed good. The stock's trading, it's trading well today. And I think that's I think it's still, I think it's one of those, I think it's a great stock longer term, considering everything else, the valuations, everything else is getting. I think Uber's got a lot going on. It's already been through the trenches. It's experienced bad markets. It's experienced a lot of different things. So I think, you learn as a company, you learn a lot. And I like Uber relative to some of these other smaller names. But also, one of the better research analysts came out and said it was his top pick. That gave me even more confidence even in the trade. So, these are things that I think Uber's got a lot going on. The reopening should be really, really good for them. They got stronger as a company, I believe, in the last year because they didn't have Uber Eats developed, and now Uber Eats is running the show, right? So I think as a company they're learning a lot, and they learned a lot, in a short period of time. So I like Uber. I see that it's doing well, and they deliver drugs now. So they're in the marijuana game.
Nice. Yeah.
All right.
Love
Good.
it.
Uber.
Awesome.
What else? How about we take one? I talked a lot here. We take one from if there's a question.
Let's see. There was one from Mark. Let me just quickly find it.
Mr. Mark. Where's Mark?
Okay, here it is.
Is there a method for looking for cheap options in a low volatility period? Cheap options in a low volatility period. We're in a high volatility period, but in a cheaper options. Look, at the end of the day, I don't believe in going to the IV rankings and looking at the highest vol and the lowest vol. In general, high vol, low vol, they're there for a reason, right? Fubo trades 120 vol, 130 vol because it's going to move. Which, by the way, brings me to a point on Fubo. We were talking with the stock at 22. It started at 22 and a half, and someone was seeing these put buyers. Call buyers, and I was saying, I'm not sure about this. This seems a little odd. The stock moved all the way down to 20 quarters. It's about 10%. Okay. Then it moved up and it shot up to 25. It's about another 25% move up. Okay. In 2 days. And, when the thing's moving up and down $1.50, people have to understand Fubo trades at 130 volatility. That's what it was trading last week, 130 implied volatility. The number is very simple. You take 130 and divide that by 16. The math is simple, 16. You can use a calculator, okay? 130 divided by 16 is 8.125. That means 8.125. That means, see 8.125? 8.125. Okay. That means that the market expects the stock to move 8.125% every day. Mm-hmm. So when Fubo went up 8%, and people are laughing at me saying, and I'm saying it's supposed to happen. I mean, it's supposed, these moves are supposed to happen. Okay, 20% is even not out of the question. It's supposed to get these moves. Even down, I would never, on a day it's down 8%. It's supposed to be down 8% or up 10% or down 12%. So Fubo's trading at 130 vol. I don't know what it's trading today, but at the end of the day, you have to always consider what you're looking at, the type of stock you're looking at. Okay, and I think when you're looking at implied volatility as sort of a way to weed out some of your trades, I would be careful, because some of the best trades are the high volatility trades. Some of the best trades you can make are the names that have already implied volatilities that are high. And the reason why you have to change your mindset, if the market is implying like it's high, the market is trying to guess how much this is going to move in one direction or the other, right? The market is trying to figure it out, right? And saying earnings are coming, we're going to raise this thing. We don't know exactly where, but the supply and demand is going to drive it. And so when things are high, the market is already in tune with something's about to happen. Now, what the hedge funds think and how they think is they look at what they think the stock is going to actually do, or where it can go on good news, on bad news. And then they're trying to relate that, where they think it'll go, to the implied vol. But I don't really think that there's, Coca-Cola might have low vol. It's like 14, 15 vol when it's trading, not now, but when it's trading low. And, do you want to buy Coca-Cola vol? Well, you still got to get a move. And right, the market's pricing in some move, expectation of move in Coca-Cola. So I would say, Mark, it's, keep focusing on, here's areas where you can find great ideas. So, you can look at charts and look at like the squeezes and look to see when the Bollinger Bands are going like this, where they were wide and now they're going like this over 3 months. Those are ways. That's one way that people can look at whether or not you think there's going to be a big move or a big spike. Look at chart setups. That I think is a little bit more intuitive than just trying to look at an IV ranking and saying, in this world, what's a high vol, what's a low vol, where do I want to look? That's why I think UOA is incredibly valuable because it's actually showing you where people care on price. Price. It's showing you what people care in, what sectors they care in, what they're doing. We've analyzed even the banks, and by seeing the flow and having me analyze for you, I can tell you, I can read to you what they're thinking or how they're thinking. TSM, Taiwan Semi. Sure, it went up huge. And look what's happened since it got to that level. It's been sold for about 3-4 days in a row. I'm not saying it's not going to go up. I'm just saying that there's a stall there because someone big collared that position up there. And he's going to defend his collar because he told you 2 weeks ago, if it gets there, I'm going to sell it. Okay. That's why I'm doing this trade, because I'm buying this, let's call it the 110s, 100s, and 120s. I think it was the 100, 120s. I'm buying the 101, selling the 120 calls, buying the 100 puts, selling the 120 calls. And I'm doing that now because if it gets above 120, I'm going to be laying out stock. That's what he's saying to you. And so when it gets to 123, 24, it's not a surprise to see the stock start trading weak again, up there. Not saying that he might run out of stock and then he keeps going and then he's happy to get rid of most of his stock. But he's telling you, I'm going to be selling stock up there.
Right.
All right?
Cool. Yeah.
All right, my friend. Good.
I love it.
That's it for today, man. I'm out of breath.
Thank you, Felix. Thank you more for the question.
DraftKings and Fubo. Let's watch them.
Yeah, definitely. Keep an eye. All right. Thanks, guys. Like the video, subscribe if you haven't, and we'll see you tomorrow.